And hello again. Welcome back to Tuesdays with Lloyd's. My name is Pat Talley, Regional Director for Lloyd's in the U.S. and your host for Tuesdays with Lloyd's. We're excited to be back after a 2-month summer hiatus and continuing to bring you compelling content on Lloyd's each month. We kick off our fall season with another installment of our popular Syndicate Showcase series, where we welcome senior executives from a managing agent's leadership team to share their perspective on a variety of market-related topics and to allow you, the audience, an opportunity to ask questions. For context, the Lloyd's market currently has 77 active syndicates, and the number of managing agents, the organizations that operate and oversee a syndicate's activities, stands at 52. Before we start, we thought we would share some interesting information on Lloyd's mid-year financial results, which were released last Thursday. In short, it's been a strong 6 months for Lloyd's. The numbers represent our market's best underwriting performance since 2007. We have returned to overall profitability with a resilient balance sheet and made strong progress on our strategic initiatives where we continue to drive toward a more efficient, sustainable, and all-inclusive market. We announced a mid-year underwriting profit of $3.1 billion as compared to a $1.4 billion profit for the same period last year. Investment returns stood at $2.2 billion versus a $3.7 billion loss last year, and an overall profit before tax at mid-year of $4.8 billion, as opposed to a $2.1 billion loss in 2022. The market's combined ratio of 85.2% is a full 6.2 percentage points improvement over last year's 91.4 combined, demonstrating continued progress in underwriting performance. We also continue to support profitable underwriting growth, with gross written premium increasing nearly 22% to $36 billion. If you'd like to read more in detail, you can read the full report on our dedicated webpage, which Mark will post in the chat shortly. And with that, let's move on to today's profile of AXA XL, which operates Syndicate 2003 at Lloyd's. Joining us today from AXA XL are Simon Hearn, Chief Underwriting Officer for London Property and Casualty Wholesale, Paul Howard, Head of Coverholder and Alternative Distribution, and Vanessa Leemans, Head of Cyber UK and Lloyd's. Before we begin, just some quick housekeeping. We do encourage you to submit questions during the discussion, but please use the Q&A tool instead of the chat box. And as always, today's session is being streamed live on Lloyd's YouTube channel and is being recorded. We'll drop a link to the channel in the chat box and encourage you to share it with colleagues and clients. Lloyd's YouTube channel features a complete library of previous Tuesdays with Lloyd sessions and other great content, all available for on-demand viewing. And with that, Simon, Paul, Vanessa, welcome to you all. And let's just jump right in. Simon, let's start with you, if we may, and set the stage a little bit. Tell us more about AXA XL, its history and place within the Lloyd's market.
Yeah. Hi, Pat. Firstly, thank you very much for inviting us. It's a real pleasure to work with you guys on this piece, and we've seen how important it has been to the US distribution for you guys. So in a nutshell, AXA XL is the property casualty and the specialty risk division of the AXA group. We provide insurance and risk management products and services for mid-sized companies through to large multinationals, through to, in some cases, the consumer side of the fence, and obviously reinsurance solutions to insurance companies globally. We've got over 30 product lines, including property, casualty, and cyber, as well as the more specialist products such as fine art, equine, livestock, accident, health. Our clients are typically leaders in their fields and are from a huge variety of industries, including construction, energy, marine, automotive, manufacturing, and pharmaceuticals, as you would expect to see with any large Lloyd's organization. Consequently, there's an ever-moving need to ensure that we're able to provide solutions that are suitable for their needs. So again, we have to be very reactionary sometimes, but also proactive in our solutions. As an expert in risk consulting, we have a network of over 400 consultants globally that work with our underwriting teams to enable them to really understand the business of our clients. Ultimately, our mission is to be the trusted expert and global partner in complex risk, protecting what matters to our customers and partners. We've got 2 syndicates in Lloyd's, not the one. There's firstly Syndicate 2003, which has a long history in the market. It was originally launched in 1984 and it rebranded to AXA XL in recent years. So Syndicate 2003 focuses on property, casualty, specialty lines, including marine, aviation, energy, obviously cyber, war and terror, accident health, alongside many others. Secondly, we have Syndicate 3002. Our life syndicate was launched in 2009. So in London, we have a team of almost 300 underwriters, all based in our London offices, whom are structured in 4 main product pillars, these being London Wholesale, marine, energy, aviation, specialty, and retail. Hopefully that gives you a high level overview.
And you're currently interim CUO, I understand, is it correct?
I am, yes. So in addition to my day job as CEO for London Wholesale, I'm the interim CUO of AXA XL UK and Lloyd's, reporting into Sean McGovern, who is the CEO of AXA XL UK Lloyd's.
Okay, yeah, I know Sean well. Give him my best, please. And I definitely recognize some of the iconic brands that in the history of 2003, I believe Catlin, Wellington. So it's been quite a journey for Syndicate 2003 to this
Absolutely.
point.
It's a very well-established brand.
Without a doubt. Well, let's stay with you, Simon, for this next question and help us better understand what distinguishes AXA XL from the rest of the market, or what sets it apart.
Yeah, I think alongside Lloyd's, we have a very strong financial rating in our own right. Obviously, as being part of the AXA group, we have that benefit, meaning that alongside Lloyd's, our clients can really count on us to be there when it matters. We have that longevity working with the AXA group. It's a very strong brand globally, but also that financial capability that we have is largely second to none. The length of time we've been active in the US, and I appreciate that we are talking largely to the US contingent here. We've been active for a long time in the US market and Lloyd's. We've consistently had a significant presence in the Lloyd's market, and our book has evolved to meet the needs of our US clients. We've embedded claims and actuarial teams working directly with our trading teams to ensure that we're actually, the clients are central to our proposition, which is super important as we're building out further. And again, looking at our underwriting talent, we have strong underwriters, and we are developing that underlying underwriting talent to ensure that they're experts in their field. We have a number of lead underwriters in our classes, and we lead over 70% of that business. But ultimately, our approach is to support our clients long term. One of the main differences we have, where we are part of that larger AXA group, we have a wide array of many products and many capabilities that we can leverage that wider experience within the AXA group. So overall, a very, very strong proposition, but our key thing is our people. We really value the people that work within our syndicate.
Yeah, so in many ways, and I was doing a little research on the company, you're truly full service and support a lot of that necessary functionality internally, not relying on outsourcing, as you said, actuarial, risk control, things like that.
Yeah, absolutely, and it's part of that desire to build that fully encompassing understanding of how a client operates and how we can best deliver the solutions to them. We have to understand what they're doing, how they're thinking, and importantly, how we can evolve the product and the proposition that we offer to them. We can't give them off-the-shelf product. We have to be very, very creative with how we deliver the solutions. That's why people come to Lloyd's. That's why people come to the London market.
Sure, absolutely. Okay, well, Paul, let's maybe pivot over to you and let me ask you, why would a cover holder choose AXA XL? And in fact, I should. There I go. I probably should. We're using terms specific to Lloyd's when we say cover holder. So just for the benefit of anyone in the who's viewing who may not be familiar with that term, cover holder simply means any organization that's holding the pen for Lloyd's, placing business in the market through a delegated authority contract. So that being clarified, yeah, Paul, why would someone select AXA XL?
Unfortunately, Pat, we've got some world-class competitors. So if someone wants to do business with us, we've really got to be on our A game. So one of the reasons they've come to us, We've actually been doing, as Simon mentioned, we've been doing the delegated business for over 30 years. We're an established, recognised lead market in this space, and I think there's really sort of three areas that we want to try and sort of push there. And I think, as Simon's alluded to, it's the continuity of business. Again, particularly for the US market, we've been there for a long time. We've got a lot of consistent partners there. And I think it's also a consistency of underwriting approach. So I think that's another area that the cover holders might not always like some of the things we say, but they know we're going to be around for the long term. We're going to be there as a partner, and we're going to grow. We're going to grow with them. We're going to help them move in the right direction. I think one of the other things that Simon alluded to is also the range of products we offer. So actually, rather than being a monoline insurer, we can sort of meld some of our other products together to make it a more attractive proposition for our cover holders. So it enables them to sort of differentiate themselves to their competition. There's also I think another key part is communication. So a lot of our underwriters and our claims team and our risk consultants will often be on the road, actually going to see people and finding out exactly what's happening in their worlds. And I think that's another key point, that we're actually entering into that important dialogue.
Excellent. And the point you made, you have to bring your A game, because there are a lot of others out there to compete with.
We wish there wasn't, but unfortunately, yeah, there's a lot of good people out there, and I think actually from the US brokers' perspective and the US cover holders' perspective, having that access to an alternative in London is often very attractive as well.
Absolutely, excellent points. Excellent points. Okay, well, Simon, let's pivot back to you. We've talked a lot about the strengths and capabilities of AXA XL. So why is Lloyd's important to AXA XL?
Yeah, it's I think I pick up with Paul's optimism about having less competition, and I actually commend him for that. I think, as we've established, we've had a long and a very strong relationship with the corporation, and through which we've demonstrated our market commitment, and we've proven that we're going to be there when our clients need us most, which is when there is ultimately a claim. Through the Lloyd's mechanism, we partner with our clients in complex risk, recognising the importance of this marketplace. This is quite a special place. The market offers coverage flexibility, not an off-the-shelf product. It's almost like a menu of products, which Paul's alluded to, which we can then polish into what the client actually needs as an end solution. Obviously benefiting from the licenses and distribution that Lloyd's affords us. Again, this complements our own local US business offerings, so again, it's a very important part for us. It would be a very remiss of me if I didn't mention face-to-face interaction. It's a key part of how we trade. It's a key part of why the Lloyd's market works in the way it does, and importantly remains attractive to the clients. Modernisation will, of course, continue to enrich this process, and again, it will continue to enrich the underwriting process. Obviously, Lloyd's has now set out to improve the underwriting room. We really commend that. It's really important that we get that vibrancy back in the market and that mixture of market, particularly on the ground floor. And at AXA XL, we've taken the opportunity to revisit our footprint. Face-to-face trading really acts as a breeding ground in our market for the next generation of Lloyd's underwriters and brokers. And we really need to continue to embrace that and nurture the talent we all have. Otherwise, we risk a skill shortage in the future. And ultimately, our clients spend a lot of time, a lot of money coming in to see us. We need to mirror that activity and be present in the market.
That's an excellent point. I think we're all aware of the significant brain drain that's occurring in this industry as huge swaths of institutional knowledge, people are retiring now and over the next couple of years. So it is critical that we do all we can to promote and support the next generation, and particularly that centuries old face-to-face interaction that is so synonymous with Lloyd's.
Absolutely, 100% agree.
Okay, well, Paul, let's I guess as head of cover holders and delegated authority, what kind of role does Lloyd's play with your cover holders? I mean, how would you describe your appetite and approach to offering capacity?
I think one of the things, Pat, that you see, particularly when you're traveling around and seeing a lot of our partners, is the first thing you see when you walk into the reception is that the plaques cover holder at Lloyd's, and I think they really have that as like as like a badge of honour. I think the Lloyd's brand, the way that the cover holders, the MGAs sort of use that, I think it's a real differentiator. And I think actually we write business in about 22 different countries globally, but it's probably no surprise to you that the US is our number one location. And again, many of our largest partners are from the US. So I think for us, it's access to that key market, but it's also how Lloyd's operate. So we're competitors with many of the other syndicates, but actually we come together for the good of the market in various market associations, and I think that's also quite key to sort of add to the sort of the richness of debate. So one of the other roles that I have, I sit on the Lloyd's London Market Association's Delegated Authority Committee. We're looking at ways that we can make London and the Lloyd's market easier to deal with, and I think that's a key part of the strategy, is that actually, yes, we're competitors in many ways, but actually there's a real sort of cohesion of thought with the market, and that is another one of the benefits of London. From our own perspective, we try and come up with a solution that the market wants. Again, that might not always be what's first put on the table, but I think we always try and come up with a solution, and I think that's quite key. And then one of the other things I think is really key is that it's not just a monologue, that we do listen, and it is a dialogue. So I think we get the richer information from that. Obviously, everyone wants a quick response. So if it's a yes, then let them know quickly. And actually, if it's a no, but let's know, let people know there. So I think actually by offering that sort of long-term, mutually efficient, mutually beneficial relationship, that's one of the key things that we've got from our Lloyd's book, and particularly our Lloyd's book in the US. I think one of the other areas that we look for is we see a lot of submissions from around the world. I think one of the key areas that we like to look at is actually, does it really give a comprehensive outline of the opportunity? So do we actually know what we're being asked to look at here? And I think that really comes down to really stressing the USP of the actual opportunity, because the people who are closest to the actual clients, they're the ones who know the risk back to front. So I think that's quite key. And with everything, data. I know we often get criticised by saying, well, we give you all this data, what do you do with it? Well, actually, yeah, that's a key part of our process with the actuarial, with the ag modelling, with the accumulation, so that we can build that balanced portfolio. And I think finally, one of the other things is a lot of the insurances tend to come up around about the same time. So don't forget the early submission.
Well, some great points there. I mean, I particularly was struck by when you say it's a solution the market wants, not just pulling something off the shelf and this should meet your needs, and then dialogue, not a monologue, and both mutually beneficial relationships. So it's clear you view these as partnerships.
Yeah, absolutely. Again, some of our, many of our underwriters have been, and the claims people, they're sort of family friends of a lot of their sort of partners, and have known each other for many years. And actually, as the organisations have changed and developed, and new family members have come forward, then that's continued, as it has done with our new generation of underwriters and claim staff. So I think that's one of the lovely parts about the business too, is that we can grow together.
Absolutely, absolutely, and very well put. I think we've been waiting to hear. Best for last. We want to hear from Vanessa. So I think I was going to ask Simon, how would you describe the AXA XL Lloyd's underwriting appetite? And I think that will key in nicely with Vanessa's area of specialty.
Yeah, firstly, I would say it's evolving. I think it's very easy to put down a marker in the sand and then just stick with that. I think as we see how the market develops, how the business develops, and importantly how the industries and the clients develop, we have to be deliberate about how we look at that. So it's all about balance. It's all about ensuring that we're developing a portfolio that's accretive to the syndicate. It's not outsized in a particular class of business, and it manages those underlying risk factors, whether it's CAT, whether it's pandemic, whether it's a shift in particular trends. It's purposely built to protect stability. I think as we're going through the Lloyd's planning process at the moment, there's a lot of attention on how we build out, and how we're making sure that we're setting ourselves up for a portfolio that we know will be stable, will be sustainable. Importantly, something our underwriters can be really proud of. They worked very, very hard to get us to where we are. I think when we're looking at it, it's very deliberate. I think we're building where we can add value and not being afraid to explore new areas. I think when you've seen a number of markets looking backward to fix some of the areas of the past, you get very stuck into that, and then you don't look forward into what you could and should be doing. And again, there's a real push from us to actually ensure that we've got our underwriters thinking in the right way. So again, very, very important for our go forward. I think when we're looking at our classes, our two largest classes in the syndicate and within US are property and casualty. So there is a leaning towards that. However, as we look at all of our classes, we have undertaken reviews of our underwriting appetite. And whilst I can't put a plug in, we would be happy to share the link to that latest version of appetite for the attendees on here. So be more than happy to do that. It's very easy to go through a list and give people a lot of exposure there. Obviously, but one of the points of having our cyber leader Vanessa on here is to give you a little peek under the bonnet of some of the areas that we're looking at, and how we're evolving our proposition to meet the needs of the market.
Excellent. So Paul, do you want to tee this up?
Yes, certainly. Thank you. Again, as Simon mentioned, we obviously do the property, casualty, marine, energy, aviation, but we've got a huge amount of specialty business as well. One of our key areas going forward, because it's one of the things that our clients keep on asking us about, is the cyber business, which is developing and evolving rapidly. So we thought this would be a great opportunity to introduce you to Vanessa Leemans, who's our head of cyber insurance. So Vanessa, over to you.
Thank you, Paul. Thank you. So yeah, AXA XL has been a leader in the cyber insurance market for more than a decade. And ultimately, to prepare for the next decade and beyond, we really must continue to strive for clarity in our coverage, prepare our cyber underwriters for the cyber risks that are yet to come, and help really our clients to take action to boost their cyber defenses. So at AXA XL, we continue to invest in our cyber expertise and resources to help us to do so. So first of all, we hire new cyber underwriters globally. So in London, we now have a team of 6 cyber underwriters. We also have a global cyber underwriting academy to help train our underwriters for the future. We grew our cyber incidents response team as well. And last year, for example, we addressed more than 2,200 cyber claims globally.
Specifically for your US appetite for cyber business, maybe.
No. So for the US cyber appetite, we very much have US cyber business appetite for like large corporate clients with revenues above $1 billion, really across all industries. And if I highlight maybe briefly our key differentiators, first of all, we really look to partner with brokers and their clients to offer innovative solutions on their complex cyber risks, like, for example, our unique cyber parametric solution. Another key differentiator is that we can support on captive fronting solutions across many business lines, including cyber, or cyber-only captive fronting solutions. And then finally, we have a dedicated cyber claims experts, and we really partner with clients to successfully investigate and resolve their covered cyber claims fairly and accurately. So yeah, that's over to you.
Well, excellent. Like I said, yeah, cyber, it's every day, not a day goes by where we're not reading some new development or challenge in that sector. So good to hear. I guess let's kind of want to use our crystal ball now and say, look forward. And Simon, what would you say are your key underwriting priorities as we move into 2024?
Yeah, it's I think it's really important that we keep looking forward. I think we've come through our period of making sure the business is right sized and making sure the business has that solid foundation, and we want our underwriters to move forward with confidence. We've spent a lot of time building the proposition, making sure it's in the right place and continuing to evolve it, and we've got a great foundation, a strong business model, so we're continuing with strategic growth. And alongside our core open market and delegated business, where there are varying appetites and varying pushes within particular sectors, we will be focusing on our strategic initiatives. So one of them is the energy transition, as we're looking towards how energy companies are evolving, and we have to support them through that positioning. Sean McGovern, our CEO, is actually leading that work on behalf of AXA XL globally. We have the cyber piece, which Vanessa has very kindly has spoken about there, and then our specialty classes. When we're looking at the Lloyd's piece, specialty is almost that I'd say the unsung hero. We have a lot of focus, particularly in the delegated space. Everyone wants property, everyone wants casualty, but often you're dealing with distributors and delegated contracts that have that ability to actually also look at the specialty classes. So again, something that we're keen to make sure that we're delivering as much product through the same channel as we possibly can, just purely because it's a very efficient way of doing things. But also outside of the development side, I think also remaining aware of the known unknowns, as well as the emerging risks in conjunction with long tail developments. Everything we're looking at, what are we seeing coming through now? What do we need to be thinking about for the next iteration of our business and how things are looking forward? Data. I think Paul's mentioned data. I think he had the phrase data, and I think every insurer is looking at how they can get the edge with the data that they're collecting within there. How do we predict what our model should look like? How do we predict what clients want? How do we get better data so we can actually improve things for our end client? And then finally, I think on the new products and innovation side, I think we've had some good new innovations over the past year. We've had our excess emissions product, which is attaching to marine hull contracts. We've had developments within Vanessa's areas, and we've had these sorts of things, and really just getting our underwriters out there prepared to seek out these new opportunities and look for the quirky. I think there's some stuff in the chat around how do we get newer cover holders, how do we get newer business into the market? Come talk to us. I think we're very keen to see how we can support this market better, and the best way for us to do that is be out in amongst it.
Excellent. Paul, would you add anything to that?
Yeah, definitely. I think in the delegated space, we're keen to develop even deeper relationships with our existing partners. Whether that's looking at how we can enhance the coverages in some way, but just helping them thrive in what's in many ways going to be a dynamic market in 24, but it's also going to be a challenging market in some ways. But where there's challenge for some, there's opportunity for others. So I think we really want to look at that. we're obviously, as Simon's alluded to, when it comes to new opportunities, yes, we're definitely keen on looking at new opportunities, but I think they've got to be complementary rather than conflicting with any partnerships that we've got currently. So we're keen to have new opportunities where we can really add value to the actual MGAs in again that partnership approach that we've mentioned.
Excellent. All good. Simon, before we've got some questions queuing up, but do you have anything you'd like to add before we move into the question segment?
Sorry about that. I put myself on mute. I think as we've been looking through, I think we've been through a hell of a journey, and I think as we're coming out the other side, and we firmly come out the other side of that, it's really getting that confidence in the teams, actually celebrating the diversity we've got as well. We've got a lot of diversity within the business, and actually bringing that to the forefront, ensuring that our younger underwriters are getting the opportunity to be out there and making a name for themselves in the market. I think that's the real key for me, is as we look forward, of actually being more of a partner to the market than we ever had been. I think that's a super important thing for me as I look forward to how we're viewing the market going forwards.
And I think we'll be seeing you next week at WSIA, correct?
Yeah, so we will be harassing you, no doubt, in WSIA. So we're, for the second year in a row, we're actually sending a senior team to WSIA. I'll be in attendance myself. So if you see me, please don't hesitate to come over, shake my hand. I might even buy you a drink or something. But again, all joking aside, we view it as a really important touch point for meeting with US distributors, US cover holders, US wholesalers. It's a really good way to elevate the market messaging we've got out there. And again, we're very keen to work in conjunction with you guys. So again, there's myself and Paul, plus one of our US casualty leader, Glenn Secular, are supporting the Lloyd's boot camp on the Wednesday. So if you're in attendance there, we look forward to meeting you. But again, we are at WSIA. We have a contingent of about 9 or 10 people. So please don't hesitate to reach out.
Absolutely. And you gave me a great opportunity. I'm always a shameless promoter of boot camp, so I won't let a good opportunity get by me. You will be participating in helping in the segment on the role of the underwriter. And for those who are not familiar with it, the boot camp, this is our 7th year of offering the Lloyd's boot camp. It's basically a day and a half full immersion of learning about Lloyd's, the market structure, its different distribution channels, and specifically how to access them, what specialty classes are available in the market, the chain of security, and so on and so forth. And all the sessions are facilitated by experts from the market, like Simon and Paul, and the camp is actually free of cost. So attendees don't need only handle their travel and lodging. If anyone in the audience would like to know more about boot camp, or someone on their team who might like to be considered for boot camp in 2024, since 23, those are in the books about at this point. Mark will drop a link in the chat where you can find out more information about the Lloyd's boot camp. So it looks like we got a few questions. Let's tackle some of those in the time we have remaining. I'm just going to grab a couple here, and you all can just whoever feels the driven to answer, just jump in. The first one: with all the cat losses occurring and frequency of large losses, how is AXA XL and the Lloyd's market reacting to pricing and terms and conditions going forward in 2023 and onwards?
I think as we're looking at the cat pieces, obviously it's a market-wide piece. So it's obviously we're not in this alone. And I think as we're looking through it, I think you have to carefully navigate this. You have to make sure that the portfolio is purposely built. There's a balance within there. I mean, it's very easy to have too much of one and not enough of another. So again, as we're going through that, we do track the market. We do see how things are developing, but importantly, we do have to then have that balance of how much cat capacity do we actually have. And then it's about that deployment. It's about deploying it in a sensible way, ensuring that we're deploying it to where it's most needed within the portfolio, but importantly for our supporting clients.
I think also on that, Pat, it's another advantage of the Lloyd's market with a syndicated approach, because typically on risks, then people will take a specific share. So whilst of course the cat losses will impact a portfolio, because we're doing it on a shared basis, then obviously the market will the market will continue through that cycle, which again Simon mentioned earlier, which I think is another key part of that consistency and continuity.
Well, and that's a really good point. I think is that front end clarity that you get from working with a Lloyd's placement, where you have that very clear syndication that sits in the front. If you're buying at the back end, you can see that you have 15, 20 or even 30 markets on there. Perhaps that's more of the old days. You've got a very clear thing that there's actually lots of capacity and lots of capital supporting a particular risk. I think as we're looking forward, that's one of the parts that makes us continue to support the class of business in Lloyd's.
Very good, very good. Another question, are parametric cover alternatives being considered in your near future or even available now?
Yeah, we I don't know, Vanessa, if you want to take that on the cyber side first of all, and then I can give a more general approach.
Yeah, no, thank you. Yeah, so we have a unique cyber parametric solution that works with a first trigger of malicious cyber activity being identified on a dashboard, and then a second trigger, which is really the parametric, would be a loss in the share price. So that's a unique solution we recently developed. It's one example, yeah.
Sure. And then in other areas, we've got a specific brand, AXA Climate, which looks at a number of the things like excessive rainfall, excessive wind, and other things like that. And again, we can supply some contact details for that.
Okay, thank you. A couple more here while we have a few minutes. What do you see as the strongest growth markets for U.S. coverholder business?
We're seeing a lot of again, as Simon mentioned a little bit earlier, we're probably seeing in the time that I've been doing the role probably more specialty opportunities than we've seen in the last couple of years. So I think people are looking at that for various solutions. I think yes, of course, that we're being approached for sort of property cat cover if it's there, or actually people are very excited if they come with a non-cat cover, because they feel that'd be very exciting to the market. But I think we're actually seeing growth in many of the areas. But I think if I'm looking at it from an actual opportunities perspective, probably more in specialty classes.
Okay, and I think we'll take maybe one more here, perhaps to you, Vanessa. Curious to know if or how AI affects your how you assess risk from a cyber perspective.
Yeah, that's a good question, and I think it's one we can actually maybe come back after the presentation with more details on that.
Okay. Do you all have a view of the Q&A? Do you see anything else in there you'd like to tackle before we wrap things up?
And I was just sorry, after you.
Sorry.
I was just looking at the from one of my brokers that I know. So Stephen, good to have your question on here. I think when we're looking at new cover holders and how do we attract them, I think it's by getting out there, speaking to brokers, getting out to things like Wholesale, sitting down and doing the 15-20 meetings a day to meet that new potential cover holder. One thing I would say is we do have a high bar. I mean, as with any of these, there is a cost to bringing someone on board, and we want to make sure that we're actually doing it for the right reasons. We're not going to have potential issues down the line. We're looking at something that is accretive to what we're doing, but also, can we see something that they're doing that's a little bit different to what others are doing in the market? How do we get that nuance to it? So Yeah, there's definitely an appetite for new business. And we do have a triage process that we've put in place in recent months. So rather than us going all the way through a process and then potentially saying no 9 months down the line, we put in a process whereby our underwriters can actually, I say, fast track to get a decision in principle as to whether it's something that we as a business would like to take forward before we would go into Lloyd's for approval, or we would go into the business for approval, because it's very important that we get either an affirmative or a negative out there quickly, just so that the broker can manage expectations, or again, they know if they can work with us. Hopefully that helps.
Absolutely.
Yeah, I think. Sorry, Pat. I was just going to say, just to back that up. I think it's that communication that's really key, and making sure that we let people know as soon as we can what the answer can be, but also what stage in the process we're at. So I think overall, both as AXA XL and as a Lloyd's market, we're trying to make ourselves an easier place to do business with. So I think the way that we can look at that and streamline the onboarding process, but at the same time making sure that we've got the right amount of due diligence and governance is absolutely key going forward.
Absolutely. Well put. Well put. Well, it looks like we've reached a good stopping point to wrap things up for today. Simon, Vanessa, Paul, very sincere thanks once again for sharing your time and insight with us. And I look forward to seeing you in San Diego next week. And thanks again for coming on. And that will do it for us for this edition of Tuesdays with Lloyd's. We hope you found it informative and engaging. Be sure to mark your calendar for our next installment, which will be on October 24th. When we'll hold a moderated roundtable discussion on D&O underwriting for the U.S. market. As we close the session today, you'll receive a brief set of questions in your browser. Please take a moment to fill these out and be very frank and candid in your remarks, because we rely on your feedback in building our content. So your support's greatly appreciated. You can also drop us a note anytime at usevents@lloyds.com. So until October 24th, let's keep staying connected. Take care and have a great rest of your day.
Thanks.